I will be present about background of BNM, Bank Negara Malaysia. Bank Negara Malaysia is a central bank of Malaysia and was established on 26 January 1959 under the Central Bank of Malaysia Act 1958. It plays a crucial role in maintaining the country's financial stability and promoting economic growth. Bank Negara Malaysia has various mandates, including the promotion of monetary and financial stability. The BNM aims for low and stable inflation while also safeguarding the financial system's stability and soundness. Next, issue and manage Ringgit Malaysia. The BNM is the sole entity responsible for issuing the national currency and managing its value. Additionally, supervise and control financial firms. The BNM oversees banks, insurance firms, and other financial organizations to ensure they operate securely and sensibly. BNM also serves as a banker and advisor to the government. BNM advises on economic policy and debt management for governments. According to our analysis, Bank Negara Malaysia performs 5 key functions. The initial function is monetary policy. The Bank Negara Malaysia sets interest rates and takes other measures to control the money supply and inflation. In addition, there is financial control and monitoring. The BNM creates and enforces regulations to ensure the soundness and stability of the financial system. The next step is foreign exchange management. The Bank Negara Malaysia controls the country's foreign exchange reserves and oversees the foreign exchange market. In addition, there is a payment mechanism. The BNM regulates the country's payment system and promotes the development of new and efficient payment system. Last but not least, financial literacy and consumer protection. BNM encourages financial awareness and safeguards consumers against financial fraud and unfair behaviors.
So, for the next is what are the economic problems happen in 2020, 2021, 2022 until May 2023. So, without wasting any time, I will explain in the next slide. In the year 2020, the world economy experienced its worst recession since the Depression end. This was the completion of economic disruptions caused by COVID-19 containment measures, as well as increased risk aversion. As a result, labor market conditions deteriorated amid a decline in firm production activities, domestic demand, external trade, and worldwide expansion, especially during the month of this year. When the COVID-19 pandemic started in March 2020, heightened risk aversion caused a massive flight to safety. However, massive liquidity injection and low for long monetary policy commitments from major central banks have seen helped global financial market recovery in a synchronized manner across asset classes. Global trade and GDP shrank by 9.6% and 3.5% respectively over the course of the entire year, with the GDP declining by 17.1% in the second quarter of 2020, the effect was greatest. The second half of the year saw a gradual improvement in growth, which was helped in part by a rise in external demand and the reopening of the domestic economy in the context of more focused containment measures. The drop in global oil prices was the main cause of the headline inflation, which was negative at 1.2%. Due to overcapacity in the country economy and weaker labor market conditions, underlying inflation stayed low at 1.1%. In 2021, the global economy recovered from the pandemic crisis in 2020, but unevenly. Global economic growth and trade have recovered by 5.8% and 9.3% accordingly. However, the recovery was inconsistent, particularly in advanced economy and emerging market economies. Despite new COVID-19 variants impacting the majority of economies, greater vaccination progress in AE enabled a faster lifting of restrictions, resulting in a faster recovery in economic activity. Along with increased demand, shortage of labor in several AE and supply chains, interruptions increased logistics and cost of inputs, causing higher prices in the second half of 2021. Against the backdrop of rising inflation, most central banks started to normalize monetary policy. The imposition of nationwide restrictions from June to September 2021 in response to a quick resurgence of cases due to the Delta variant affected the recovery progress in the early part of the year. Though more important sectors of the economy were permitted to continue operations. In contrast to the movement restrictions in the second quarter of 2020, business and households were better equipped to comply with the restrictions on movement and standard operating procedure (SOP). Increasing household spending was facilitated by the growth in employment and the ensuing rise from wages in the private sector, along with increased capital expenditure by business on automation and digitalization. The growth in private investment was boosted by increase in productive capacity, particularly in the manufacturing sector. In 2021, headline inflation grew to 2.5%, mostly due to rising fuel costs. In early 2022, COVID-19 policy responses had a significant impact on the global economy as new variants of concern emerged. Countries had to take drastic measures to stop the disease spread, which hampered economic activity. However, during the beginning of 2022, improved pandemic management had allowed certain economies to remove prohibition and reopen international borders. This resulted in improving labor market conditions as well as an improvement in economic growth and consumption. Central banks rapidly raised interest rates, resulting in broad tightening on the economy and increased risk aversion. Inflation in Asia regional economy increased, although remained quite low as compared to the AE and the rest of the world. This was due in part to current energy price control and subsidy in some economies and also to decreased inflation in Asia for staple food. The most recent month of 2023 experienced a 3.3% expansion in the Malaysian economy. Strong domestic demand served as an anchor for growth. Wage and hiring increase continue to support household spending. In the meantime, multi-year project progress and business capacity expansion drove investment activity. Despite a sustained decline in external demand, exports stay weak. However, the rebound in inbound travel slightly offset this. On the market side, the industry of construction, services, and agriculture continue to foster expansion. Due to decreased production of refined petroleum products and weaker demand for electric and electronic E&E products, this was mainly offset by the manufacturing sector production decline. Headline inflation remained at 2% during this period. Both non-core and core inflation rates were moderate. Non-core inflation fell as a result of lower prices for food and fuel. Core inflation fell to 2.5%.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So now I'm going to explain on tools of monetary policy in scope of quantitative. Okay, as we know, after the COVID-19 happened in Malaysia, our economic growth has been slowed down. So there are a few monetary policy done by government to help the economic growth. Okay, in open market operations, the central bank will buy the short-term bonds from the public or commercial in the open market to increase the purchasing power of the public to encourage more spending. Okay, it has been proven when Bank Negara Malaysia decide to purchase RM 9.5 billion of government bonds between March 2020 and December 2020 in order to ensure effective financial intermediation by addressing excessive volatility and liquid conditions, to manage banking system liquidity and build inventory for repo and securities lending operations. Okay, by taking this action, it will help to contain potential market dislocation and smoothen excessive volatility in the bond market. Recovery of the market from the increases of volatility and significant capital outflows at the onset of the COVID-19 may occur. Next is discount rate or bank rate. Okay, on 7 July 2020, Monetary Policy Committee (MPC) of Bank Negara Malaysia decided to reduce the overnight policy rate (OPR) by 25 basis points to 1.75%. The ceiling and floor rates of the corridor of the OPR are correspondingly reduced to 2% and 1.5% respectively. Okay, by reducing the OPR might help in providing additional policy stimulus to quicken the rate of the economy's recovery and further stimulate the country's economy. Okay, this action also will be enforced with other proactive measures such as Prihatin SME Plus and National Economic Recovery Plan or PENJANA, which as economic stimulus package to help in generate the economy growth, to provide more job opportunities and encourage more consumer and investors to curb economic contraction. Other than that, Pemulih also one of the framework that designed as a loan moratorium to give a financial relief to people for having deferment packages in financing repayment loans and interest for individuals and small and medium-sized entrepreneurs, SMEs, borrowers or customers for a period of 6 months from the 1st April 2020. So people may choose to have a 3-month loan repayment moratorium or a 50% reduction in their loan repayments for 6 months. So this plan is only applicable for car, housing and business loans, and it might help people in managing their financing due to restriction of movement to use the money in spending which can help in economic growth. Okay, next is interest rate, which is the central bank will persuade commercial banks to reduce their rate of interest on deposits. This will reduce total savings and increases the level of demand for money from people. So on the other hand, when all banks decrease interest rates, the cost of credits to the public will be reduced. This will increase public purchasing activities and increase the demand for money. Unemployment also will be reduced when firms offer more jobs. Okay, the central bank will persuade commercial banks to reduce their rate of interest on deposit. This will attract more credit and increase the level of demand. Okay, for the last monetary policy for quantitative is reserve requirement, which is the amount of funds that a bank holds in reserve to ensure that it is able to meet liabilities in case of sudden withdrawals. The central bank uses reserve requirements to increase or decrease the money supply in the economy and affect interest rates. Okay, with effect from March 2020, Bank Negara Malaysia proposed to announce a 100 basis point reduction in the statutory reserve requirement SRR ratio from 3% to 2%.
Another tool of monetary policy is qualitative. Central bank employs qualitative monetary policy instrument to affect market perception, expectation and behavior instead of explicitly aiming at particular monetary aggregates like the money supply or interest rate. In situation where typical quantitative metric may be inadequate or unproductive, this approach can be especially helpful. These are a few types tools for qualitative monetary policy. First, economic growth. The goal of stable economic growth is closely related to the goal of high employment because businesses are more likely to invest in capital equipment to increase productivity and economic growth when unemployment is low. Conversely, if unemployment is high and factories are idle, it does not pay for firms to invest in additional plants and equipment. Despite the tight relationship between the two objectives, policy can be particularly targeted at stimulating economic growth by directly encouraging businesses to invest or by encouraging individuals to save, which free up capital for businesses to do so. There are two types of economic growth, which is potential and actual. The annual percentage rise in national output or the growth in actual production is known as actual growth. When growth rate numbers are released, real growth is being discussed. The rate at which the economy could expand if it used all of its resources and had no idle labor, equipment, factories or land is known as a potential growth. Next, stability of financial markets. A financial crisis may cause the financial markets to become less effective in allocating capital to individuals who present profitable investment possibilities, which could result in a severe slowdown in economic growth. Because interest rates will greatly increase uncertainty from financial institutions, that are also contribute to see stability of financial markets. Interest rate increase cause significant capital losses on long-term bonds and mortgage, losses that have the potential to cause the financial institution holding them to fail.
Next, I will be present about Malaysia's GDP growth in 2020 until 2023. Okay, in 2020, Malaysia, like many other countries, faced economic challenges due to the global COVID-19 pandemic. The Malaysian economy contracted in 2020. The exact GDP growth rate for Malaysia in 2020 would depend on the data sources and the methodology used for calculation. According to the World Bank, Malaysia's GDP contracted by 5.6% in 2020. The International Monetary Fund (IMF) reported a contraction of 5.6% as well. The Malaysian government's official figure for 2020 was a contraction of 5.6% as well. Malaysia's GDP growth in 2021 was 3.1%, following a contraction of 5.6% in 2020. This positive growth was driven by several factors, including the easing of COVID-19 restrictions. As restrictions gradually lifted, economic activity picked up, particularly in sectors like manufacturing and tourism. Besides strong global demand, rising demand for Malaysian exports, especially electronics and commodities, boosted the economy. Apart from that, resilient domestic demand, household spending remained relatively stable despite uncertainties, supported by continuous wage growth and government stimulus measures. While positive, the 3.1% growth in 2021 was still below pre-pandemic levels. However, it represented a significant improvement from the previous year and was seen as a sign that the Malaysian economy was on the path to recovery. Malaysia's GDP growth in 2022 was a strong 8.7%, exceeding both initial estimates and the previous year's performance. This marks the highest annual growth recorded in the country in 22 years. Here are some additional details to consider. This impressive growth was fueled by factors like, first, recovering private spending and investment, decreasing unemployment, and last, strengthening of the Malaysian ringgit. The growth was broad-based, with improvements in all economic sectors contributing to the positive outcome, while 2022's growth was exceptional. The current global economic condition pose challenges for sustained high growth. Next, in 2023, Malaysia's GDP growth in 2023 is estimated to the around 4% with some projections ranging from 3.9% to 4.3%. This growth is considered moderate compared to pre-pandemic levels, but still positive given the challenging global economic environment. Here's a breakdown of the key factors influencing Malaysia's GDP growth in 2023. First, strong domestic demand. Consumer spending remained resilient, supported by a relatively low unemployment rate and improving income prospects. Second, modest exports. External demand weakened due to the global slowdown, impacting Malaysia's export-oriented sectors like electronics and manufacturing. And number three is government support. The Malaysian government implemented various measures to stimulate the economy, including targeted subsidies and infrastructure spending. Last, global uncertainties, rising geopolitical tensions and ongoing supply chain disruptions added to the economy headwinds. Overall, Malaysia economy demonstrated resilience in 2023, navigating the global challenges and achieving positive growth. Looking ahead to 2024, the growth momentum is expected to continue, albeit at a slightly slower pace. The key drivers will remain domestic demand, government policies, and the trajectory of the global economy.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Afiq bin Ahmad. So today I would like to present regarding what action by Bank Negara Malaysia in 2020, 2021, 2022 and 2023 in May. So in 2020, that year was COVID-19 year. So unexpected things was happened. So what action taken by central bank? They lower the interest rate to 1.75%. The main purpose they lowers the interest rate is because of to stimulate the economy back, since COVID-19 affect very bad to all the industry and to all the things in economy. And for 2021, in the early 2021, interest rate was started at 1.75%. So as we expected, is the lowest interest rate. So at that moment, the economy is still not healed. So what happened is Bank Negara still maintain the rate, since it can say that it's still in the lower situation than normal time. For 2022, central bank increased their interest rate in a series of moves. They're reversing the rate from its lowest point of 1.75%, which is implemented since 2020. Starting May 2022, OPR increased 0.25 basis point till OPR back to 2.75% at the end of 2022. There are, I think, 3 or 4 times the OPR increased by 0.25 basis, which is in May, and then July, September, and November. So at the end of 2022, the OPR rate is at 2.75%. This is driven by inflation rate that already hiked up than since COVID time. Inflation rate at that moment is around 3.3%, and then that's why central bank started to increase the interest, the OPR rate at that moment. And then for 2023 in May, 2023 till May, central bank increased OPR rates only once, which is in May, and it changed the OPR from 2.75% to 3.0% basis rate. So in 2023, government start to central banks start to maintain the inflation rate and everything. So all the implemented things driven to this OPR rate. OPR rate just up 0.25 basis rate at May because of inflation rate is already manageable, and then is already back to normal situation.
Price stability is upheld by monetary policy, which contributes to sustained growth. Monetary policy employs its instruments to effectively control money as persistent price increases are deemed to be a monetary phenomenon in order to preserve medium to long-term price stability. Lower price levels are linked to sustainable long-term growth according to theory and actual data in the literature. Monetary policy affects the economy's financing circumstances in a broad way, affecting not just costs but also credit availability, banks' willingness to take on certain risks. It is also affect assumptions regarding the future cost of inflation and economic activity, which will have an impact on the currency rates, asset prices, product pricing, investment, and also consumption.
For the conclusion, the COVID-19 pandemic has severely impacted Malaysia's economy, leading to increased living expenses, unemployment and recession. The Malaysian government and Bank Negara Malaysia have implemented measures to maintain and strengthen the economy, including large fiscal stimulus plans and monetary easing initiatives. The pandemic underscored the importance of money policy in improving preparedness, managing crisis, prioritizing government priorities, strengthening the social safety, and advancing technology.